Trade wars have significant implications for global finance, influencing economies, financial markets, and investor confidence in various ways. Market volatility. Trade tensions and tariff escalations can lead to increased market volatility. Uncertainty about trade policies and potential retaliatory measures by affected countries can cause fluctuations in stock prices, currency exchange rates, and commodity prices. Supply chain disruptions. Trade wars disrupt global supply chains as tariffs and trade barriers affect the cost and availability of raw materials, components, and finished goods. Companies may face higher production costs, delayed shipments, and supply shortages, impacting profitability and operational efficiency. Impact on economic growth. Trade wars can dampen economic growth by reducing international trade volumes and investment flows. Reduced exports and imports, coupled with decreased business confidence and consumer spending, can slow down GDP growth and hinder job creation. Currency movements. Trade tensions often lead to currency fluctuations as investors seek safe haven assets or react to changes in trade policies. Strengthening or weakening currencies can affect international trade competitiveness, inflation rates, and central bank monetary policies. Business investment decisions. Uncertainty caused by trade wars can deter business investments in new projects, expansions, and capital expenditures. Companies may postpone investment decisions until trade policies clarify, affecting economic productivity and long-term growth prospects. Financial market reactions. Trade tensions prompt reactions in financial markets, with investors adjusting their portfolios based on perceived risks and opportunities. Bond yields, equity prices, and commodity futures can reflect market sentiment and expectations about trade war outcomes. Consumer impact. Tariffs and trade disputes can lead to higher consumer prices for imported goods, reducing purchasing power and affecting household budgets. Consumer confidence and spending patterns may change, influencing retail sales and overall economic activity. Policy responses. Governments and central banks may implement monetary and fiscal policies to mitigate the negative impacts of trade wars. Stimulus measures, interest rate adjustments, and trade negotiations aim to stabilize markets, support industries, and sustain economic growth. Global trade dynamics. Trade wars reshape global trade dynamics as countries seek alternative markets, renegotiate trade agreements, and diversify supply chains. Shifts in trade patterns and geopolitical alliances can have long-term implications for international trade relations and economic integration. Geopolitical tensions. Trade disputes can escalate geopolitical tensions and strain diplomatic relations between countries. Political instability and geopolitical risks may increase, influencing foreign policy decisions and global security dynamics. In conclusion, trade wars disrupt global finance by increasing market volatility, disrupting supply chains, slowing economic growth, influencing currency movements, impacting business investment decisions, affecting financial markets and consumer behavior, prompting policy responses, reshaping global trade dynamics, and potentially escalating geopolitical tensions. Managing trade disputes requires coordinated efforts to promote stability, restore investor confidence, and support sustainable economic development on a global scale.